Hello, everyone. My name is Brian Huang, and I'm one of the co-founders at Glider. As heavy DeFi users, we believe that DeFi has plateaued. Very little has changed since the early days of Uniswap, Banker, and Curve. And if anything, it's gotten more complicated with a bunch of verbs nobody outside crypto understands. When I first met my co-founder, John, I said there are two things we can do together. One, we can simplify DeFi for everybody. And two, we can take DeFi beyond just swaps and lending. Let me introduce you to Glider. With Glider, we turn your investment beliefs into fully automated on-chain portfolios. What do I mean by this? You can do things like create any basket of rebalancing tokens. You can react to any one-off trigger, whether it is a price movement, a tweet, the weather, you name it, literally any data. Most importantly, all of this occurs without gas, signing, bridging, and it's fully non-custodial. This is what it looks like live in production today. Every crypto app today is a very poor mimic of something in TradFi, and that is not interesting to us. We're strictly interested in things you can only do on-chain, and we're interested in increasing the velocity at which assets can move between protocols, chains, assets, you name it. The orchestration here is what's important because these are things that Robinhood and Coinbase can't do out of the box. As I mentioned yesterday, we're also not just a direct-to-consumer platform. We have a B2B2C platform. We're already talking with the biggest wallets in the world, including Phantom co-founders who are close friends and investors. We don't just talk crypto, we can actually build. My co-founder led all development of matcha.xyz at 0x. I led all development of trading at Anchorage. And we have a team of engineers from Coinbase, MetaMask, and many other major players in the crypto space. We raised around 6 months ago, led by A16Z's CSX program, and some of the biggest consumer names in the space, including MoonPay, Coinbase, Uniswap, and Ondo. Now, we don't usually do this, but today we're going to share some metrics because the judges asked for them after yesterday. As of today, we have over 250,000 people on our waitlist. We have let off about 11% of these users, of which now we have 15,000 active portfolios holding real assets on real chains. We also have done over 20 million in volume, and we do 4% every single day of all of the user ops on Base. This is incredible leverage with every network that we ever go to. On launch, we will be doing upwards of 10% of all transactions on Base. VCs, you may not know it yet, but the distribution layer is at the apps. It's not at the network. Now, I'll leave you with one thing. Glider is not a vault. You own your assets, so you can lend them, you can participate in governance, you can vote, you name it. Come glide with us.
Thank you very much. Okay, judges, your questions, please.
Well, thank you for the metrics. I know you love the metrics. I'm curious how the actual custody and execution layer of Glider works. Like, hey, if I tell you run this strategy, how does the transaction actually get signed? What are the limits on that? Walk us through that.
Yep. So when you come into Glider today, you can log in with any social login, but you can also connect your wallet. We use Privy, nothing crazy. But when you create a portfolio, what you're doing is you're signing a session key that allows us to execute on your behalf, do these rebalances in a fully non-custodial way. So again, your seed phrase protects all of these assets. User funds are never commingled. In fact, every portfolio spins up its own set of wallets. And so at Glider, we have hundreds of thousands, soon millions of wallets under the hood.
And how are you finding these users? How much is that costing you? And how does that compare with what you estimate the lifetime value of those customers are?
Yep. We have a lot of really interesting ways of acquiring users that'll come soon, especially using some ZK stuff, which is a whole other conversation. But, you know, in our fundraise, we were very specific in targeting consumer-facing companies. And MoonPay, Uniswap, Coinbase, these are massive distribution players, not only on the B2B2C side, but supporting their portfolio companies. So it's been incredibly organic. We have a massive following on X now and Discord and all the usual flywheels. But I would say we've been quite surprised at how much it has picked up. Yeah.
think I asked a little bit about this question last time as well, but I'm curious how you guys internally prioritize when it comes to ecosystems. Given, your success at base, I'm curious if there's, some type of ruthless prioritization that you guys do internally to kind of pick what's the next ecosystem, the next batch of users that you want to target.
There is indeed a ruthless prioritization process that occurs. It's our firm belief, as I mentioned in the presentation, that apps have the power. Apps have the users. Apps can use those users to leverage everything below that, whether it is a protocol, whether it is a middle layer infrastructure provider, you name it. And when you use Glider, you don't even have to know what chain you're on. So that's important. So to answer your question, yes, we do. We've talked to every single major chain. Nobody is doing something quite like Glider, and every major chain wants Glider on their platform because we create a massive amount of transactions, right? We fill block space. We are constantly paying gas. We are constantly generating volume. And those are all metrics that they absolutely love.
I think maybe we talked about this a little bit yesterday too, but do you currently charge fees? And yes or no, going forward, do you view this as more of an AUM-based revenue model or a transaction volume-based revenue model?
Yep. So the whole purpose of Glider is to trade as much as possible, like seamlessly. We do not charge fees on trading, right? If you want to come in and rebalance every block, you can do that. We will not charge you fees. We also pay for all of your gas, which is really important. But we do have to make money somehow. So we do charge TVL fees. These fees depend on the types of assets that you hold and the amount of assets that you hold that are tiered. But in the long term, we can drive these fees to zero because there's many other ways to monetize. And we have incredible leverage, again, over everything that's deeper into the stack, as long as we have the users. And B2B2C will also subsidize the direct-to-consumer side for us.
Is this an equity-only deal, or you do envision a token?
We do indeed have a token that would come at some point. Not to divulge too much, we've spent a lot of time with A16Z on what the token should look like, and specifically worked a lot with Eigenlayer as well on top of this. There is a deeper decentralization meta that would bore everyone here, so I won't go into it, but we could have a longer conversation about what that looks like.